The biggest trading mistake that you are making, which is inhibiting you from being a consistently profitable trader, the biggest trading mistake that you're making. This is one of the most important videos that I have made in a long time. David Jaffe with BestStockStrategy.com. Please like, comment, share, and subscribe. I read and respond to every single comment, so please leave a comment below. You can also click the little bell to get notifications when I put out a new video. The biggest trading mistake that people make, there are actually two of them. The first one I have covered in multiple videos, is that traders tend to trade way too many contracts and they tend to trade too aggressively. The second mistake is something that has substantially improved my performance while also mitigating risk. This is the same discipline and patience that I have exercised, which permitted me to make money in May of 2019 when the market was down around 9%. Yet myself and all of my students who followed the alerts, they were able to profit during May of 2019. And what this huge trading mistake that people make is that they trade too often. This is something that is directly counter to what TastyTrade tells you. Now, I don't want to tell you that TastyTrade is biased because they own Tastyworks, and as a result, they get paid on volume and they get paid commission for every time that you trade, and also they get paid by the exchanges as a kickback for pay per play or like pay per volume. But the fact is, from my experience, and I think that this is something that is extremely wrong with the perception of traders, where they think that in order for them to make money, they have to be extremely active. They have the perception of a successful trader as someone who is in front of a computer screen, or rather 5 screens, and who is very anxious and who's extremely busy. But that is not the reality. You make money by making good decisions. And the best way to make good decisions is to be extremely patient. During May of 2019, when the stock market was down 9%, I made around 5 or 6 opening trades the entire month. So sometimes I made 2 opening trades a week, other times I made 1. There was never a situation where I jumped in and jumped out, and then jumped in and jumped out and tried to guess the market or tried to catch a falling knife, or any of those situations. And I know that you probably don't believe me, but I can tell you that one of the biggest mistakes that traders make is that they are not disciplined in their entries and they are not patient enough. We do not try to catch falling knives. I've had people sign up for the 7-day trial at beststockstrategy.com/memberships. And then we wouldn't make any trades, and then they would get really upset. The funny thing is that the market in that week was down around 4%. So whereas everyone else lost a tremendous amount of money because the market was down 4%, they didn't lose anything, and we made money. Yet they're complaining because their perception of how to be a profitable trader is that you have to sit and watch 10 computer monitors and jump in and jump out and read charts and all of this BS, which is not going to help you be a profitable trader at all. In fact, you're just going to lose money. Let me reiterate something that's extremely important that I have mentioned on a few other videos. You should never enter a position with the expectation that you are going to have to roll or manage that position. And when you enter and you sell iron flies on ETFs, or you sell a straddle, or you sell a strangle, there is actually an extremely high likelihood that you're going to have to manage that position at a future date. Now, I don't care what TastyTrade tells you about, hey, if you have a call that's tested, just roll up the untested side and use that credit to increase the strike price on the call side. The reality is that 98 or 99% of people who trade options do it as a means of increasing their existing income. They are not full-time traders. They work full-time jobs, whether it's a 9 to 5, a 9 to 7, or they work as an independent contractor and do things such as real estate or they are entrepreneurs. Nobody has time to enter a position only to then get stressed out and have to worry about that position at a later date. And that allows me to delve into and to segue into the next point, where when you have a challenged position, it is extremely stressful. It's very stressful. There was a situation, actually right now at this moment, I think it's June 12th, 2019, I am short a put in Google, which is not in the money, but it's relatively close to being in the money. And this is a situation where Google has fallen around 20% in just the past 6 weeks. Now, granted, we were extremely selective on our strike prices and we're up money in this position. However, at the same time, just having the position be relatively close to being in the money means that I have to think about it. I have to watch it tomorrow. I have to make sure that it doesn't fall in the money, because then I might have to roll and manage the position. The reason I'm telling you this is that people do not discern and do not allocate enough money to their A or A plus trade opportunities. Instead, what they do is they will scan based upon implied volatility, and they will not make any type of discernment between selling a put in Tesla or selling a put in a company like Amazon. And to me, there's so much more inherent risk in selling and trading Tesla than there is in trading McDonald's or Dollar General or Lockheed Martin or one of those other stable bellwether cows where we have consistently earned a tremendous amount of money. Or another company would be JP Morgan. When you sell a put in Tesla or you sell a call in Tesla just because it has high implied volatility, I might characterize that as like a C- grade trade. But because Tastyworks and TastyTrade tells you that you have to quote unquote trade often, when you trade those C or C plus or even B trades, as opposed to allocating all of your capital to an A-, an A, or an A plus trade, you will find out that it is those C and lower quality and inferior trades that end up giving you all of the headaches, all of the stress, and end up costing you money. So my goal for this video is to have you start thinking about changing your perception about what it takes to be a successful trader. There are times in my trade alerts where I will make 1 or 2 opening trades a week. Sometimes people will think that you have to make 10 trades every single day in order for you to validate and justify yourself being an expert. But the reality is that those people who are making and trading too often, they are fake gurus and they do not maximize their profits, and they're also substantially increasing the risk that they're taking. Because if you're entering in positions in May 2019 or December 2018 just because you believe that the market has bottomed and you're trying to catch a falling knife, and then the next day the market opens down 50 points and down 2.5%, that put or the call option that you sold previously is going to end up showing you a loss. The same thing on the call side if the market pops up the next day. So what I'm saying is that patience is extremely important. You have to exercise so much discipline, because when you trade, you are not rewarded for taking action. Again, let me repeat that. When you trade, you are not rewarded for taking action. You are rewarded for making good decisions. And you should always try to make a little bit less during the good times so that you lose a lot less during the bad times. Again, you should always strive to make a little bit less during the good times so that you lose a lot less during the bad times. If you have interest in seeing one of the world's best options traders at work, so that you can follow my trades. You can go to beststockstrategy.com/memberships and sign up for the education course, or also take the trade alerts, which is 7 days for only $19. And I can tell you, you really have to start changing your perception about what it takes to be a profitable trader, because the profitable traders are people who are extremely disciplined. They stick and go. They make a trade and then they wait. They are extremely patient hunters. They have a few bullets and then they wait for the game of their choice, and then they hunt, and then they get the prize. I don't know, that was a bad analogy, but they hunt and they only take the shots that provide the highest statistical probability and provide them with the greatest payoff. They do not shoot wildly like an automatic whatever and just hope that it hits something. Trading often is false. Trading often is a fallacy. Trading often will increase your stress levels and decrease your profitability while simultaneously increasing your risk. David Jaffe with BestStockStrategy.com. Please leave a comment below, like this video, and if you have any questions, I'm here to help.